Hey everybody, Eddie here. Going to do a market update for next week. So it was a pretty interesting end of the week. On Thursday, those CPI numbers came out. We broke the lows and then hit 3,500 and we got a giant short squeeze back up. It was actually an incredible day. I We did really well on that day, and it's we actually traded it with the algo that I made recently, and it kind of caught the entire move back up. So I'll show you that how that happened a little bit later on with the algo. But on Thursday, so we did shoot back up. We broke the 8-day moving average. I was expecting that we were going to gap fill, but it looks like we did went into gap resistance, got rejected at the 21-day moving average, which was the first resistance point. So we did get rejected, and then we came back down. We did broke below the 50% line, so likely we can come back and actually test the lows once again before any kind of bounce back up. But from the look of it, I think we're just going continuation down. If next week we get flush down right at the open, expect we're going to hit these lows right here, this around 3,500. And then if that breaks, and we're looking at that 3,400 from all the way back here from the pre-COVID highs. And then if it continues down, we can go as far as 3,200 and 3,000. Now, the scenario here is we could come all the way down to 3,000, or even I think the lowest point that we go to is around right here where the peak supply is, which is around 2,800. So that is a big area to come down to. And you want to be prepared for something like that, right? You can make a lot of money on the way down day trading this. Definitely do not want to hold any type of overnight positions, because in this market now you get one of these days where you go 100 points down, then come back 200 points back up, right? So days like that are insane, and it can happen in these big bear markets. That was actually a giant short squeeze by market makers because they had a lot of options, a lot of put options that they need to hedge. And if they push it back up before expiration, what happens is everybody has to cover their shorts, and then you get a big giant short squeeze, right? And then all the options expire, worthless, and market makers make their money. So that's how it works, these big moves, right? So, if we do break the low of this, you can expect a big flush down. If we break the low of this, I pretty well assume that we're going to hit 3,400 and then break down to 32. So, and it can come down pretty quick, because if you look back, a lot of people have been comparing this to 2008. So 2008, we had a very similar breakdown chart, and it was just the start of the breakdown. It's not even the big flush down just yet, right? So let's go back to 2008. So this is 2008. So we're at this point right here, right? So we're at this point right here where I would say we're around this point right here. Sorry, this point right here where we get that big flush down, then get the big reversal back up to test the moving averages, and then you get that big flush down, right? So usually that's the last leg. So if that happened, that's the last leg, and then it's going to start forming a bottom. So you want to look for patterns like this one, like a V-shape recovery type of pattern, inverse head and shoulder type of pattern, some sort of basing pattern that it breaks out from, and you want to look for big giant volume coming through. So as you can see right here, right at the bottom, you see the big huge spikes in volume. Those are funds can start in some positions, right, and start buying. So that's how markets move. It's when big money start coming in and buying it up, that's when they start moving, right? So we're at the I say around this point right here, which is an area where it can actually bounce and then come back down, right? So towards the end of the year, we do expect some seasonality into play, and we could get like a bounce back up. Most likely we do bounce back up. We're going to test the 4,000 area, most likely. to hit 4,000 and continue down lower. So if that was the case, we say test 3,400, come back up and then retest 4,000 before the next leg down. That can happen as well. So I don't try to predict how bad it's going to go. I just go day by day at the moment, because there's really no point to guess. Because if things happen, it can reverse very quickly as well. So you just have to be prepared. That's why I don't want to hold any type of overnight positions. I just want to make my money during the day. So I'll be in, I'll be out, because during the day, there's very little news. And if there is, you catch it and then you get out really quickly and you don't go out with a big loss, right? If you hold anything overnight, you could get one of these 100-point gap ups, 100-point gap downs, and you'll be screwed for a while. So, that's the point I'm trying to look at. And this megaphone pattern, if it works out, it's coming down to about 3,200 area. So if it takes its time, like if it bounces and then takes its time coming back up, then we're looking at around 3,000 to 2,800 to bounce off the bottom of the megaphone, right? So that's the type of scenario we're looking at. I do not see huge spikes of volume just yet. So it's not the bottom yet. You see the volume. We are increasing volume. So I'm just going to turn the volume. Sure. Just go and turn the moving average volume, so you can see what type of volume we're hitting at. So we are a little bit above average volume, but it's not enough. What you want to see is volume like this, huge spikes of volume that has almost twice as much what it's trading at right now, right? So when you get huge volume like this, it used to tend to factor in the bottom, because majority of the people funds are starting to deploy the money. Right now it's not quite there yet, so there could be still more selling, right? It's not capitulation yet. So when we see capitulation you see big giant spikes in volume, right? So right here in the 2018 blimp, you see huge spike in volume, right? COVID, huge spike in volume, right? Any of these big dips throughout the years, you get these huge spikes of volume to push it back up, right? These huge spikes of volume. So that's what you're looking for. We are not seeing that yet. I mean, we see a little bit. So if you even look on the day where we went down 100 points, back up 100 points, it's not that high in volume, right? That means the funds are not deploying a lot of cash yet. It's not the bottom. So, don't try to factor in the bottom when it's not quite there yet. I mean, we could be chopping around for a while. So we could stay in this type of state for the next couple of years. Who knows, right? So, until I see very clear signals of a bottom, I'm not going to swing trade. If I am, it's going to be for a very key area where I'm going to catch a bounce and then I'm out type of thing, right? So we did make some swing trades around right here. So we did capture this move up here with some swing trades. So, there are trades to be made, right? Towards the end of the year, I do expect we get some kind of dead cat rally, right? And these dead cat rallies could be big, like this one right here. That's a pretty big, significant rally. So right here, yeah, that's about 16% rally, right? So if you could catch a 16% rally in the index, it's a fairly good trade, right? So just keep an eye out for some bounce like that towards the end of the year. October 21st is a huge expiration for options. There's a ton of puts expiring October 21st, so expect some huge volatility on October 21st expiration, right? Leaning towards that, you can see some really big swings in price, so there could be a lot of money to be made. So just pay attention to those dates. Anyway, let's take a look. I think the Qs have a similar chart, so really no point to analyze both. So if you look at the Qs, very similar. And like I said, same thing. Like the volume did spike, but it wasn't sustainable volume. Like it started dropping again. So there was some little bit of buy-in, but there's nothing big, right? You want something big like this, like this, right? So right here, we have that big dip. Right, you see that big spike in volume, and then we get a big push. Big spike in volume, big push. So volume is a really important thing to look at when you analyze in stocks. And I use volume for pretty well all of my trade setups. it helps me confirm the trade, right? All right, let's take a look at the VIX. So the VIX is still very elevated. It's about 30. It is at the high point right here. So this is congestion area. There was some that made a huge bet on the VIX for November. So I think they're expecting a huge blow up type of trade. I think they bought like over $100 in strike price, right? So, you know, if that breaks out of here, you can expect we get a big crash, right? Like right here, these type of VIX kind of action. So, you know, we're at the resistance point right here. So see how it moves. If it start breaking above here, you really want to be careful. I would say about 40. If you break above 40, you want to really start playing downside, or if you have precisions, you want to hedge them. You probably want to hedge them out if the lows get taken out once again. You want to hedge them down to at least 3,000 points. All right. So let's take a look at stocks. So Apple, we're down back. We gave back all the gains from previously. It's still at this area right here. So this is the demand zone. So at the demand zone, if it breaks below that demand zone, it's going to come down a lot, like down to here to $80. So like I said, I talked about this before. $80 is where you want to buy or start a position, right? So you can actually do some at 100 and then just add some at 80. This is for long term only, not for trading. Long term, because these are the type of things that you can buy long term. And Apple's one of them, so you can do that. Chips are in huge trouble. So it looks like we're in the demand zone right now, the first one, which is around $50. Um, and you know, with the trouble that they're having with the chips, they can't sell to China. So, you know, a scenario where if their revenue drops by 40%, because some of those companies will drop by 40%, you can expect it to come all the way down to like $30, even back to like 20s. That's how bad it could get. I don't know if AMD will get there. AMD right here, like it looks to me like valuation wise is a screaming buy, but because of that news point where you can't sell to China, that's a huge market. And you know, if you can't sell to China, you're gonna lose a huge portion of your revenues. So if that's the case, you know, worst case scenario, prepare for the worst case scenario, which is down here 40, $30, right? So you can dip your toes in it and then just add like a little bit at a time. Same rule, you can't don't deploy any more than 50% of your money in any type of bottom fishing for longer term portfolio. Even if it's longer term, you don't want to put all your money in one basket. You want to wait till it actually bottoms and then just buy your way up with the other half of the money. That's the best way to manage your money and manage your risk, right? So you could still try to bottom fish some of these huge discounts here, but you know, you have to be very careful and have that risk control, right? Amazon, still okay, still holding the June lows. It's not going down past that just yet. They do have earnings coming up. So earnings season, if earnings are good, you can expect a big rally, right? We want to get a big short squeeze off everything if earnings are good. If earnings are bad, it's going to get real bad. It's going to like flush hard on that. So, you know, be very careful how you trade some stuff. If you're going in, you know, go in small and you can trade that way. But yeah, they do have Alphabet's got earnings next week actually. Oh no, 2 weeks from now. So um yeah, so I will wait and see what happens during earnings. I most likely will trade some Lalo trades on earnings and see what happens. Maybe I'll play both directions because I am expecting big moves either direction. So if you trade both directions, like a long strangle, a long straddle, or some butterflies for cheap Lalos, you can work out pretty nicely, right? So Google, it's come down towards the demand zone, which is like around here, 87, 88. And then the big demand zones, the pre-COVID highs, right here at 75. and then I don't think it'll come down to 50, but if it does, it's a screaming buy. I would like buy right here. I would put the full 50% right down here if it comes down. Right. Tesla. So Tesla, well, we talk about breaking this low right here. Once we break that low, is a goner. So right now it's right at here. June lows. Um June lows, and then right here is your huge support zone. If we lose this is 140s coming up right here. So this is the next one right here, 140. And then it'll be pre-COVID highs all the way down here. So it has a long way down if things do break down, right? And everything can break down in bear markets. It doesn't matter how good the company is, right? So you want to pay close attention to this level. Once this level breaks, you kind of get a waterfall effect down. So, you want to be very, very careful. You can see this is a big head and shoulder pattern, like huge head and shoulder pattern, which is never good if it breaks the neckline, which is right here. Right. So, you want to watch that. If you have it, you should hedge it. You should definitely hedge it. Even if you bounce back up, it's fine. You're to bounce back up, you'll make back more money than what your hedge would cost. So, if that breaks, just set an alert at say below 180. And then if that breaks, then that's when you really want to hedge it, right? Anyway, that's pretty much it for stocks. I'm going to talk about my algo now. So my algo here, this is my algo. I use it to confirm the setups during the day trades. So this is on on Friday, right? So on Friday we have that the sell right at the open, right? So it kind of like flop around for a bit, and then we got the sell signal. Once that break, once that break, it got that sell signal, and then you could have followed that sell signal all the way down to the bottom for the entire day. This is for the 5-minute chart, right? So that move right there would have made you a ton of money, especially with options, right? Even if you do shares, futures, whatever it is, it's a lot of money. That's 88 points before you get the exit signal, right? So you could have made 88 points on Friday, and that would have been enough money to pay for the algo like 10 folds over with one contract, right? So one SPX contract would have printed you that. So one SPX contract you probably would have made about 10K almost. So that's how good the trade could have been on Thursday, right? On Friday. Now on Thursday was even better trade, because on Thursday we have the flush down, right? We got the flush down, and then you could have made the money on flush down. Then you got the buy signal when it got over here to ride it all the way up to the top before you were told to sell, right? So if you measure that move, you got the buy signal right here in this bar, right? And you exit right at this bar. That's a 126-point move. One contract would have made you about 12 grand per contract on SPX, right? So you could have made a lot of money. And if you did like lottos, like out of the money options, you could have printed even more. I think I seen guys that went from 30 cents to $77 that day. So you could have been literally put in a few $1,000s, become a millionaire if you caught it all, right? So yeah, the algo here, it works great. I used the 5 minutes to have the trend following, and then I scalped the 1 minute. So if you use the 1 minute chart, right, the 1 minute chart will give you these buy sell signals. I mean, it doesn't work well in very tight ranges. So whenever you see a tight range, you want to avoid it. But when you start moving in one direction or the other, right, when you start trending, that's when this really shines, right? So right at the open, you get the sell signal right here. You could have caught all the way down to right here with the 1 minute time frame, right? That's a pretty big move, right? Just this one move is your day maker, and you don't have to trade the entire day if you caught this, right? From the top to this buy right here, that's 80 points right there, right? And if you just scalp some of these other trades, you get a sell signal right there. It's actually a little bit more than that. So like that's at least a 10-point move. A 10-point move of a 30 delta call would get you about $4, right? And then right this move right here, right? You got buy signal right here and then sell right there. That would have been about 20-point move. 30 delta on 20 points is about $8, right? 8 to $10. So it would have been a very good move. You could have made a lot of money just capturing some of these moves. Now these are pretty tight ranges right here. And that those are the ones that you pretty well avoid. Once you start seeing it becoming smaller and smaller ranges like this, you then want to avoid it and then use your technicals to confirm a breakout move. So these are basing patterns, so you would not buy it until like say it breaks out, right? I mean, if you really want to scalp like a dollar or two, you can definitely use these to scalp a dollar or two, because that's what I do. So but you have to be very quick to do something like that. So how this algorithm works is it calculates price movements per bar, and it calculates the volatility as well as a potential stop losses that you can use if you're not, you want to exit early before the signal comes, right? So these yellow bars tells you that there's a potential reversal area. It doesn't confirm it. The signals confirm the reversal, but these yellow bars and yellow circles kind of gives you an early indication that there's a reversal coming. So what I normally do is I actually trade this, and then I take profits whenever I see a reversal signal, right? And then I leave some and I continue to ride the trend until I get the confirmation, right? And if you do that, you would have made a lot of money yesterday. You would have made a lot of money on Thursday, because on Thursday, this is Thursday, you got sell signal right at pre-market, which I caught. And then we flushed down, and then I caught this move, sell right here, and then you could have caught another move, and then this is the big move, right? And then it's starting to go into these consolidation moves, right? And you can scalp these. These can still be scalpable. So what I normally do is I don't use the sell signal to actually go short in an uptrend. I try to follow the trend on the 5 minutes, and then I use the 1 minute to scalp the trend, right? That's what I do. I always scalp with the direction of the trend. You can counter trend too, but like you have to be really good at it. I do it. I know how to trade that way. And if you do it, if you do counter trend, you want to use the clouds right here to do it, right? So there's a strategy that that I use the clouds for to play reversion to the mean, right? And then I just go counter trend till it moves back into the mean, and then that's my trade. So this is a really, really good indicator, and it can be used for everything. You can but for day trading, it works with Forex, it works with futures, it works with Bitcoin, it works with index, works with stocks. And as well, if you really know how to apply your risk management and use in combination of technicals with this, that's what I do. I use a technical setup, and then I use the algo to confirm what I see on my technicals, right? And then if you combine them together, you get a really, really high probability trade. Normally, I'm a scalper, and on Friday, I decide to not scalp and just follow the trend, and just to see what happens using smaller size. I actually made 3 times more money with 3 times smaller size just by following the trend. Because normally I scalp, my bread and butter is scalping the $1 to $5 movements. But because I was following the trend, I was managing to buy and hold and collecting $10 to $20 on premium versus my $1 to $5. And I was doing it with much smaller size. So, and my returns were 3 times bigger than what it was, right? So this helps with mentality. It also helps for confirmation of what you see, because I know that a lot of newer traders, they see the setups, but they don't have the confidence to go into the setup. So this will help with that mentality, because if you see the setup and then the algo tells you to buy, then you follow the algo and then, you know, try to hit your targets to see if the algo tells you to sell yet. If the algo still telling you to hold, and then you hit your target, instead of going fully out, you can scale a portion of it and let the rest of it ride till you get the sell signal, right? And that would significantly improve your trades and allow you to collect the profits, collect much bigger profits, right? And the risk is not that big. So if you take a look right here, so say you buy right here and then suddenly it drops, right? Well, you'll be losing like maybe 10, 20 points in that drop. But if you caught one of these moves, right, that little area right here is your stop loss. Say you got stop loss right here. Well, look how much of these boxes you could have made just by catching this one move right here, right? Right, that one loss, this one move right here, you could take 15 of these losses and you still be profitable, right? So, you know, that's the type of thing that you should really consider. Just because you got stop out, or just because you bought into a consolidation instead of buying into a trend, right? And got stop out, well, you know, if you follow it a few times, you could catch one of these moves, and then that one move will pay for all the stops that you got taken out, right? So, and like I said, if you don't know anything about technicals and you're just learning, this is a really good way to trade with it. If you do know your technicals, this is a really good way to confirm your technicals as well. And it gives you more confidence in holding a little bit longer, right? Because if the algo was super bullish, like it was right here, there was zero yellow candles on the way up to here, right? So that move alone, right? Say you bought right here and you got out like on the first yellow candle, which is 63 points, right? 63 points. So if you bought the contract for 10 bucks, you made $50 on that trade, right? So, you know, that's 5x your money right there. So, you know, if you catch one of these moves, you could pay for this algo like 5 years, right? And just capturing one of these. So, you know, a lot of people ask me how it works. I mean, it's super simple. Basically, all you do is you follow the buy signal. You get your warnings to scale out, and then once you get the sell signal, you go fully out. It's as simple as that, right? Anyway, hope to see you guys in Discord. This algo is free for all my annual subscribers and for my course members. I am debating if I should make this available to my monthly subscribers as well. So right now we're beta testing. So once that's done, then maybe I will consider offering it free to my monthlies as well, right? Anyways, links is in description below to our website. Make sure you like and subscribe, and I'll see you guys next time.